If you're not getting a great deal, then you really gotta hone in on. So when you start to see the world as about, there's so many things to transform. Your relationship with money can transform overnight. So that was the first thing, was just that insight that changed my whole outlook on building wealth and money. Ultimately, that transformed my ability to attract money and just create a way more abundant life around me. You need more upfront work than most people think. Some people just, that can end really bad and can be painful to get out of. We should have just been a little more careful in that sense. Yeah, that's probably one of the biggest lessons I've learned, is just really.
Welcome to the Wealth Through Real Estate Show. Today, we're joined by Sandy Mackay, a seasoned real estate investor with over 13 years of experience, a portfolio of 200 plus properties, and a management reach of over 500 doors. Sandy specializes in the BRRRR strategy, long-term wealth building through buy and hold investing. So, Sandy, I truly want to welcome you to the show. Thank you for coming on.
Thanks for having me, Elray. I am honored to be here. Super excited to share some great stuff with you. I want to make this super educational and valuable for all your listeners and or viewers. So let's do something fun here. I'm looking forward to it.
Yeah, man, I'm excited. So, Sandy, let's go back to the beginning. Can you tell us about your first investment property? You know, did you even envision that you would have a 200 plus unit portfolio, or was it just, hey, let's get my foot in the door?
So I'll give you the quick backstory. How we kind of started. Then is first of all, I read the book Rich Dad Poor Dad. That was the book that kind of transformed my life and gave me the kind of clicked in my mind to go, maybe I'm a little more entrepreneurial than I thought, because all the other stuff in my life previous that was like, you know, be the architect, be the lawyer, be the whatever, I was like, that wasn't fitting. So that book really gave me a kind of free rein to go, okay, now that makes sense. I should be more entrepreneurial. And they talked a lot about real estate. So I'm like, real estate is attractive. I think we can do something there. And so that changed my life, that book. And when I read that, funnily enough, the next week there was a Rich Dad Poor Dad conference, or they do like a free one night thing, and then they sell you on the weekend course, and then they pitch you all the high ticket items. So we ended up going to one of those weekend courses for, you know, $150 or something. My wife and I, now my wife, girlfriend at the time. And in that course, we learned about rent to own, about flipping real estate, about wholesaling real estate. And the wholesaling one is a really good catch, because it's like, buy real estate with no money, make money real estate with no money. And we're like, yeah, that's for us. We got no money. Let's see if we can do that. And we started to do some wholesaling. And this is going back, 13, 14-ish years now. And nowadays, there's some awesome Canadians doing a whole bunch of big wholesaling businesses. Back then, there was no real wholesaling businesses that I knew of in Canada. Lots in the US. And so we were kind of learning all this US-based tactics and strategies. We were able to put together some wholesale deals in Canada, and despite everyone telling us that you can't do that, and lawyers telling us I don't think that's legal, all sorts of little roadblocks, but we managed to put together some wholesale deals. We put together one that was our biggest one. I think we did about a dozen wholesale deals in about a year's time, which we felt pretty successful with that. But they're $5,000 each kind of thing. Yeah, it's not like we were getting rich in that. But the last one we did was a $25,000 wholesale fee that we earned on it. And we used that money to go buy our first investment property, which we bought in Oshawa, Ontario, which was 2011, I believe. And we bought it for $267,000. So we did the 5% down. It was a duplex. And 5% down was in and around that $25K range. And all in with the closing costs and everything, I think it was right around that. Went into that property, didn't even realize it, but we kind of went into that and realized I had no idea what the BRRRR strategy was at the time. But once we got into that property, we realized we had to turn over one of the tenants so we could increase the rents. We had to renovate. One of the units was vacant anyways, so we had to do a couple of touch-ups and there. That was my one and only renovation project that I mostly did personally. And back in the day, there was just YouTube was like sitting there telling me how to lay the floors, how to paint. I didn't know how the heck to paint, believe it or not. Everything. And then I got really stumbled on hanging doors. That is way harder than than it looks
Yeah.
and what people think. So that really stumbled me, and had to get someone in to help with that. And I think that was the time where I said I should just not probably do these renovations anymore. This is way too hard. And but that property was amazing. A little bit lucky in the timing, but it appreciated well over the next couple of years. And we don't have it anymore, but we ended up selling that one for 415, maybe 2 years ago, or sorry, 2 years after we bought it.
Afterwards. Yeah.
So pretty good appreciation there. We forced a bit of that equity, but it was pretty good appreciation in 2 years time, and it really helped kick off our portfolio building from there.
So where was that light bulb moment? Like when you wrap that up, what was next on the agenda? You're like, okay, well, I realized the rehab portion, doing it myself might not be the best strategy going forward. What was the light bulb? What was like, okay, we moving into this going forward, we're going to scale, we're going to get more properties. Like, what was the feeling, what was the intention after that?
Well, I knew even going into that renovation that was not what I should be doing.
Yeah.
My wife's father is very handy. He's like a very handy type man. And I think I was trying to live up to her expectations of me a little bit by doing some work. And somewhere down the road, I'm like, babe, this is totally not what I should be doing. But yeah, we worked that out. At that same time, or shortly after, I guess, I had also been talking with, we were going to all sorts of networking events, local meetup, real estate investment clubs, and all that. And we were really trying to figure out where we fit in this, because at the time, my wife and I met actually through another job that we had together prior. But then I left that job. I was actually working with a company called propertyguys.com, which is a private real estate marketing company, basically. So help people sell their house privately. So I was kind of dabbling in real estate in a way. And my wife was working with a builder. She was the executive assistant to a home builder. And so we were both in real estate in some way, but, not really certain of what our future looked like at the time. And met a guy at one of these clubs, and he said, I'm a realtor. All I do work is investors. I'm looking for some young up and coming people that want to work with more with investors. And I said, you know what, I could really learn a lot from this guy. And I didn't really know this at the time. In hindsight, it was really, really smart of us to do this. But we caught him at a perfect time where he was basically just starting to build his realtor team. But all they did was investment properties. And he had a great track record of buying investments himself. He was also doing this mostly in Hamilton, and we were living in north of Toronto at the time. And so looking at Hamilton some more, we're like, up until then, we were looking at Barrie and Oshawa and some of these other surrounding towns in the GTA. But then Hamilton was like, wow, what the heck? This city doesn't make any sense. This is like, you could buy places for less than 200 grand at the time, which, being in the GTA and seeing something for under 200 grand was like impossible.
Oh yeah.
And it was like a real city too. So we're like, it's interesting. It's not like a suburb. It's actually got its own little city feel here. So my wife and I actually went and joined up with him. Both got our real estate license at the same time. And I got to sit beside him day in, day out we worked together directly for 2 years. Still a good friend. And I learned so much from him. I got so much more confidence out of it. I learned what hard work really looked like. Like, he was not an old guy. He was in his mid-30s, early 30s, even early mid-30s at the time. And he was raising all sorts of millions of dollars to buy apartment buildings. He was doing all sorts of creative financing deals. And I learned so much by being able to hang out with him every day and add value to him, because I was helping him make money at the same time. So it was a great win-win partnership there for a bit. And I just got so ingrained in the real estate investment niche in Hamilton. And my wife and I just got so much confidence to start taking action through that. So we started buying, we actually started raising money after the first deal that we did. So we started buying properties in Hamilton more so. And we also learned about the BRRRR strategy at the time, which I didn't know about, but I learned about it. And I said, oh, we kind of did that on our first property. We should do that at a a little more purposefully, and do that in Hamilton, because the numbers here are amazing. And I can take some of this money, people that I know I can kind of use my first deal as an example, and I can go talk to people about how we could do this in Hamilton now. At the time, had never raised money, had basically no money, but had one project and one property that I could show them and say, look, we just did this. This is how we did it. Here's why it worked. And we can do this. We can rinse and repeat this over and over in Hamilton. And so that's what we did. We found a partner, which was not easy. I make it sound easy, but I went on about 25, 30 coffee meetings with people saying no for whatever reason. Eventually, I kept asking them though, who else would you know that might fit for this? And eventually one of them
Yes.
said, oh, this guy might be a good fit. And when I met with that guy and he said, you know what? I don't know real estate, but I want to have a dozen or so properties in the next 10 years. I think we could, I got my own property in Toronto that's worth $1.5 million, $2 million, and I have like a $200,000 mortgage. I should probably do something with his equity and talk through all that. And we ended up buying about 12 properties in the last 10 years with that partner, still own all of them together. And so it's been a great win-win there. And yeah, we just went nuts on Hamilton and just started buying everything we could and kind of gradually started buying it a little bigger, little bigger renovations. You know, every property that none of our clients wanted to buy, we would probably buy it, like fires, all sorts of flooding, all sorts of tenant issues, everything that nobody wanted. And we went from there.
You know, there's so much value in just having close proximity to someone who's doing what you want to do. It's probably one of the best ways to learn. Yes, you can
Yeah.
learn from books. Yes, you can learn from seminars and coaching groups, but being next to someone who's actually doing it, you get to learn the little nuances of what they say, how they handle objections, how they pitch things, how they build rapport, you know, certain ways that they articulate themselves. It's sort of the best way to grow from there. That's a fantastic journey. So you then decided to use the same BRRRR model that you accidentally stumbled upon, but this time you're like, hey, I'm not going to renovate it myself. We'll put some systems in place. We'll get some people to handle that part of the job. I'm going to handle raising capital, getting the deals, that sort of thing. Now, aside from that, though, just looking along your journey, you know, many investors sort of plateau once they hit some sort of operational inefficiency. Maybe it comes down to, hey, I need to raise more capital, whatever it is. Maybe I don't have the time. What was sort of the first major constraint that you had to solve before you could keep scaling?
Great question. And yeah, you're right. A lot of people, there's two general themes of what I see. It was where people stop and kind of either throw their hands up and go, I'm out, or they just stop because they've hit enough. A lot of people stop because, you know, they hit a roadblock that's just seemingly insurmountable and they don't want to go through that headache to move to the next step. And that's one way. But a lot of people also stop because they actually were pretty successful and they were doing it, nothing wrong with this, but they were doing it for money and that's it. And they made their money and they're like, what do I need more money for? I'm good.
Yeah.
So those are the two themes I see a lot. And we definitely started out wanting to make money. That was definitely one of the big motivators. As we started to do this and I started to, you know, we ended up starting to build our own real estate team. We started to build we started a property management company in 2017, started to acquire more team members there. You know, we started to have a lot more people around this whole engine together. And as that kind of progressed, the making money part is essential, but it also became not the main goal. We wanted to help other people make money, help our staff or other realtors that we work with, teach them how to build wealth through real estate or through other paths. And that became way more motivating than just getting ourselves financially free or making a good chunk of money financially. So that was a cool evolution that I never really necessarily envisioned from the beginning, but that's what keeps it going now. Is it just I can have as many millions or whatever as I may need or may want, but I'm not going to just stop at a certain point because I hit a certain benchmark, at least not right now. And we definitely hit some hurdles on the way too, where we could have probably went backwards. I'm trying to think what story is worth telling. There's so many tough ones. We've lost money in deals. I've had a lot of people tell me they don't lose money in deals. We've lost money because we take risks. And we've learned a lot of valuable lessons through that. But we've lost money on some deals. You know, development is very dangerous to get into if you don't know what you're doing. Any version of that, we've tried to dabble in that a few times, and at the time that we did it, probably was just taking on too many projects and too many things, and had to exit on a project that really we shouldn't have been in the first place, or we should have had a 5-year outlook, not a 2-year outlook. One of the things that I've done that I screwed up for sure a bunch of times early on was partnerships and getting into business with the wrong people. And that stemmed from focusing too much on money and not about whatever else we wanted to get out of it. When we started raising money, you know, this is what I tell people who are looking to raise money is you don't need to go find 20 people. You need one person to do a deal with you. And if you do a good job for them, they're either going to want to do, especially with a BRRRR model, because our strategy was always, we'll take your 300, 400, 200, 500 grand, whatever that amount is. We'll put it into a project. We'll renovate, push the equity up. We'll go refinance. We'll pay you back all or most of your money. And then we'll just go do the same thing again. And we'll just rinse and repeat. And so once you do one of those projects and it's a win, that person's pretty darn happy. Now they have basically a free property. Why wouldn't they go do it again? And so you just rinse and repeat. And also they want to potentially tell all their friends about it because like they just uncovered some magical secret in real estate that nobody knows about. So you don't need to have like a whole bunch of partners. But what we did is we focused too much on acquiring more partners and not enough on just delivering massive value to the partners we already had. Because when you get more and more partners, you inevitably, now you have more and more clients to kind of serve, and the customer service starts to dwindle a bit. And I wish we just kind of dove deeper on those core relationships that we knew were really good and just did more business with them. But we ended up taking on other partners that probably weren't the right partners. I always tell people, don't ever take someone's last chunk of change because they're going to be calling you every day wondering what's happening with their money. And I don't think we took anyone's last money, but we definitely did at times kind of maximize someone's home equity line of credit and use just those funds. And, got into some times where if everything doesn't go perfect, which nothing goes perfect in these real estate deals, there's always some hiccups along the way. Having to talk through those challenging situations with someone who's feeling highly leveraged in their financial world is difficult. We should have just not partnered with some people and been a little more careful in that sense. And that's probably one of the biggest lessons I've learned is just really, really getting, looking beyond the initial money and whatever else we see as value coming to us in those partnerships. We've also had partnerships in business too, which is even more important that you're in the right partnership because now you're dealing with day-to-day operational things together. And it's just super important. I believe really strongly in having partnerships, whether it's through investments or in business. I think if you want to do anything big, you need some version of partners. And I love being part of a big team and doing stuff together. I'm not a one-man show by any means. But you really got to know that you're in it together on a mission together that's clear and everyone is on the same page. And you need more upfront work than most people think. Some people just hang out and have a couple of coffees and go, oh yeah, you bring something to the table, I bring something different. Let's just pair up and we'll go buy properties or we'll go start businesses. I kind of did that, but that can end really, really, really bad and can be painful to get out of. So, we've had so many challenges like that, but that's something that I think people really ought to spend more time on up front and lessons we've learned along that. That's been the biggest lesson over time that I've learned.
Yeah, no, I fully agree with that. So instead of focusing on just the quantity of your partners, it's more dialing it into having those quality relationships with your ideal partners or partners that would best align with the goal and making having an easier relationship again, because you're not maxing them out on their end where they can't sleep at night, so now they're bugging you, and then that just makes things a whole lot tougher. But I do want to
Yeah.
go back to one thing that you mentioned was, it started out being about the money, and something along the line changed. Where were you in your journey? If you had to try and pinpoint what was that shift of intention for people out there listening, like, it's they're at the stage where it's like it's all about the money, but they're curious, like, how do you get to the ship? Because they may hear people say it shouldn't just be about the money. And how did that happen for you? Did it just unexpectedly happen? And if you would, like, in retrospect, to look back and try and pinpoint what it was it a specific threshold that you hit where you just felt comfortable financially? Was it something else that clicked where you're like, hey, this subconsciously just became the mission that I sort of gravitated towards? What was that?
There's been a few different, like, I've had a few moments along the way. I've had there's probably two moments that stick out for me over time where I've had kind of big ahas around that, and how money is really, people have a very interesting relationships with money. And most people need to go backwards first to go forwards, because they need to go fix all the limiting beliefs, all the stuff that's been built for their first however many years of life that probably are not the most abundant or useful thoughts around money. You could do this with almost anything in life, but a lot of people grow up in scenarios where, you're not, it's just, money's not necessarily overly abundant. Money is the root of all evil, all these different things that we hear growing up. And so I've had to, over time, spend a lot of time auditing that and fixing that those core beliefs that are stuck in my mind, and trying to overcome those. That's one thing that I've constantly had to do. But I don't think there's anything wrong with people, like, always at the start, there's going to be a higher need for money, and there's going to be a higher desire for money. And, I think there's multiple studies on this, but if you get up to, maybe I don't even think it's 100 grand, a little less than 100 grand of income, and your quality of life doesn't necessarily improve very much anywhere beyond that. But going from zero, or like 20 grand to 70 grand, that's a big difference. So money is important at the start when you're not earning enough to get by and to live a decent life. And so I went through that for sure, where, just trying to make rent payments or mortgage payments, and money is always a little more of a prevalent when you're going through that. But what the two main ahas for me, the first one was that if I'm constantly thinking about myself, it has nothing to do with money, but indirectly it's about money. I woke up one day and realized I'm doing a lot of stuff for myself, and I got to a point where I kind of had enough. Had a pretty good amount of money. I had a pretty good amount of basically everything. Had a wife, had money. I had a great team helping me grow our businesses together. Had a lot of good stuff. And I woke up one day and I thought, I wasn't really motivated to go do much that day. And, I built out a really, I think, pretty consistent morning routine. That's not anything crazy long or anything, but it's consistent. And I always like to pour into myself first before I go pour into others in the world. But my first thought always when I would wake up and I'd say, I got to go to the gym, or I got to do whatever the first action item was on the day, I would always think about that in terms of myself. I just had that recurring thought was, I'm going to go to the gym for me, or I'm going to go send that email off to whoever because I got something about me. And I realized one day, I said that I had just heard a presentation from a speaker. I just come back from an event, and the speaker was talking about this, and I realized I got to start changing that first thought in my day. I got to change that to, I need to go do that because by getting healthier myself, or getting in great shape myself, I can go pour into my people that I'm working with every day. That very subtle difference allowed me to stop hitting the snooze button ever, basically, because it's very easy to let yourself down, right? It's a lot harder to let others down. So when you start to see the world as about others and not about yourself, there's so many things to transform. Your relationship with money can transform overnight. And that's kind of what happened to me. Is all of a sudden I realized I was helping these people invest in real estate, and we were creating a great win-win partnership there. And I wasn't doing anything to not serve them, but I was, at my core, if I was honest with myself, I was doing it because I wanted to make money and build up my investment portfolio. Something changed there where I said, I need to start doing this. And that also led me to work with the wrong partners. And because if they were a fit for me to make money in it, we'd do the deal and we'd go on. But then I realized, you know what, I want to help others more so that I need to help myself now. And I need to switch that. And by coming at it from that standpoint, gave me so much more energy to wake up in the morning and keep things moving and progressing. It forced me to audit who I'm working with a little more because I got more clear on who I actually wanted to work with. And ultimately that transformed my ability to attract money and just create a way more abundant life around me. So that was the first thing, was just that insight that changed my whole outlook on building wealth and money. And then the second one came in the last couple of years, and you could align this up with probably any faith, but I became a Christian a year and a half ago, and I never really had much God in my life, but I really poured into that side of my life over the last few years. And I really realized that money's not even ours. Through that and through my studying of that, I realized money is not ours. It's just a resource that we get to utilize, but it's ultimately like any other resource that God provides for us. It's just a resource there to utilize for a bit. But that money in my bank account is not mine. It's just there in my account, but it's not mine. I don't own it. So that kind of opened up another whole section of this mindset around money for me too. Is it made me realize that, I don't own it. I don't need to treat it like I own it. I don't need to treat it as being scarce because there's so much money everywhere, and I just need to utilize it to the best of my ability so that I can help serve God and serve others. And I realize now I kind of look at money every time I go to spend it or utilize it. I just have that now little filter there that goes, am I using this in the way that serves God and others, or am I using this in the way that's serving me? And if it doesn't serve all those three, then I'm probably not going to do it. Well, I shouldn't say that. If it doesn't serve at least the first two, then I'm probably not going to do it.
Yeah.
Ideally, it needs to serve me a little bit too, but that's the third one. That's the last filter on that list. And so, yeah, just going through those two were massive distinctions in my life, and they kind of just came on a whim on certain days. I think sometimes you make a decision or something happens in a moment, and I think I've done a good job of putting myself in situations, working alongside the right people, going to conferences, events, just being in the right place, the right time to learn those insights and distinctions. And often when it hits you, it just hits you, and those two were big moments for me.
Yeah, no, I fully agree. And I think like you mentioned, it initially starts off with needing to sort of sort out your basic needs, and then once you get to a certain level, you realize that there's not much fulfillment in that, and that the fulfillment comes from serving, because that's what we're here for, is to serve and add value. And once you actually make that connection, then life becomes a whole lot more colorful. And then just by adding value and serving others, it automatically just comes back to you. But that's not the reason why you're doing it. So no, I fully agree with that. Now, Sandy, if we were to switch over to the people who like, okay, well, you got really good at building connections, building those relationships, raising capital. Let's dial a little bit more into the BRRRR strategy, right? BRRRR's often simplified as, just recycle your capital, scale. How do you ensure that you maximize that velocity of your capital while still ensuring that, the rental income covers your expenses, allowing you to scale sort of brick by brick, as opposed to a house of cards that can just get wiped out, with a few unexpected market changes?
Yeah, and there's lots of people that have gone wiped out the last few years. So that's, we're talking about this, in a time where the market has been tough to utilize I shouldn't say it's been tough, but anyone who started this in the last 5, 6 years started in a time probably where there was everything seemed easy, and then all of a sudden overnight it kind of switched. And I
Yeah.
felt some of that pain too, for sure. Thankfully, we started this strategy more than 10 years ago, and we had a couple little blips in our cycles there where we felt a little bit of pain. 2017, 18, at the end of 2017, early 18 was a cycle there that was a little bit slower, and prices didn't drop, but they certainly flatlined a bit.
Yeah.
In the last few years, we've felt prices plummet in the areas that we're working in, and I saw a lot of people struggle through that or even get wiped out. We had some challenges for sure. We didn't get wiped out, but we had some challenges. I think, the biggest thing in that is, you have to. I'm thankful that I started when I started, because I don't know that I would have had this wisdom to avoid it either. But you really do have to audit, numbers with higher interest rates than you currently see.
Yeah.
You really gotta kind of use numbers that are not what's currently happening, and just use the worst case scenarios a little more often. And when you were running numbers in 2021 or 2020 and you were using an interest rate of 2 or less, I mean, that's so unrealistic if you look back on history. But
Yeah.
but it was what was being offered at the time. So if you started a project and you were buying in at a 2% interest rate and hoping that you were going to refinance in a year at a 2% interest rate, and then it becomes a 5% interest rate, that massively transforms your numbers. Probably, it eventually changes your appraisal amount on the end, and probably doesn't make your partner or yourself very happy, depending who's funding it. And honestly, I did not know all that in the first place. We just probably got a little lucky with the timing. But over time, I definitely learned to really underpromise to our partners, and that was a
Yeah.
couple early challenges we had on that, where nothing's going to go as perfect as you think it might. And if you run numbers on a project, first of all, I guess if anyone doesn't know the BRRRR strategy, for a super quick overview, you're buying something that generally needs some repairs, or there's some tenant issues, or there's something that's making it distressed. So you can get in at hopefully a decent price, but you need some upside there. So you're buying in at a price where you see some value there. You go in and you fix all the necessary fixes, repairs, tenant issues, etc. Optimize it as best you can. Ideally, get it to its highest and best use. Maybe that means converting it to adding more units, or adding extra income somehow, and then going back to the bank at some points, telling them, "Hey, look, I just did all this work to the project. Here's what the numbers look like now. We think this is worth X amount more." And then the bank's going to give you, depending on the type of property, probably between 70 to 80% of that money back out. Now you're going to take that chunk of cash, you're going to pay off some of your costs or your debts, and then let it ride longer term. It's ultimately a buy and hold strategy, but it's kind of like flipping it to yourself.
Yeah.
And so, yeah, we really learned one of the biggest variables in there is working with contractors. So the two biggest variables in there are, of course, first of all, you got to make a good purchase. And if you do that right, it is sort of hard to screw up. But if you, I could count on, there's many properties that I would say we got okay deals, but they weren't great deals. We've paid hundreds of thousands over asking price on many occasions, because it was in a hot market, and we still made them work. But if you're not getting a great deal, then you really got to hone in on your renovation costs, and you really got to know your numbers and what the exit plan is going to look like. I always recommend having multiple exit plans. I mean, if your only exit plan is to refinance at a optimistic number that you're projecting, that's pretty dangerous. And I'd be really cautious in those scenarios. If your exit plans are that you're going to maybe move into one of the units, or you're maybe going to be able to flip it and make a good profit, or you have some sort of other creative rent to own sort of strategy, or something the creative on the back end, you want to have multiple versions of that just to be safe if your initial strategy doesn't go perfectly as planned. And you got to learn to work with contractors because contractors are a huge variable there. And uh, being able to roughly estimate the cost is really useful. But if you're not able to do that yet, then you really got to uh, look at who you're working with and who your contractor is. I mean, I've always had the best experiences with referrals from other investors. But I've also worked with kind of like the guy who's on his own or like two buddies and a truck kind of thing, just
Yeah.
handyman style, trying to do a big project. I've worked with kind of the mid-range, small team type of people, and I've worked with the bigger company type of operation where you have a formal general contractor overseeing a whole bunch of different trades and everything. All are useful at different times, but for most cases on a duplex or a triplex or fourplex or a small multifamily BRRRR, which is what I think where I see most people starting out in and dabbling in. You're probably going to look at the middle tier guys in most cases, or potentially the kind of two guys in a truck sort of scenario. I would say I would generally lean towards that middle tier of the contractor who knows what they're doing, has experience, can take a project from start to finish, isn't going to run away with your 20 grand or 100 grand that you give them up front. I've had that happen.
Yeah.
I always recommend people don't pay anything up front if you can avoid it. If they're buying materials, fair, but you don't need to pay upfront for labor just because they are asking for 50% of the project up front. That was one challenge we had is we paid, I think it was 50% of the project, and then contractor ended up getting into some challenges financially himself, and 40 grand just seemed to disappear that we'd given them. That hurt a lot early on in our journey. That was a painful 40 grand to lose. And we had to, often, this is the toughest thing with contractors too, is when you have someone that doesn't work out the first time and you need to go get someone else in to come fix it, it's not like they're coming in and all excited because now they got to come in and fix whatever challenges that person left off, or they need to redo things. It's not just adding on it adds on like double the cost sometimes. So it's very costly, very important to pick the contractors right. And generally that means getting great referrals and working with people that have a good reputation already, and not just someone that gives you the best quote.
Yeah.
So there's a few things in there, but the BRRRR strategy is an awesome strategy. We definitely, we use that strategy so many times because you can take one chunk of money and just recycle over and over again. It's just such a good way to build wealth.
Yeah.
If you're doing it with the right numbers and not being overly optimistic and just not telling your joint venture partner that they're going to get every ounce, every last dime out of the project every time. You just got to be realistic. And if you over deliver, amazing. You're just going to generate more opportunities and more success with your partner out of that.
Yeah. That's something I fully believe in. Always under promise, over deliver. It always works out better than switching that around. You just, your relationship just sours because you haven't set realistic expectations. Now, going back to the contractors, man, that's a big one. Like, honestly, with even with a lot of the investors that I help with, buying a property that it is a value add, whether it's for fix and flip, whether it's for BRRRR, it's like the biggest variable that's hard to pin down is the renovation cost. You can easily try and predict what your after repair value is going to be based off of like some solid comparables. Anything else you sort of can put a number to it, what that rental income is going to be. You can look at some rental comps, you can speak to property managers, that's easy to get. But when it comes to the rehab, that's a tough one. And so one thing that I usually do with my investors is like, once it's under contract, let's say we have the inspection at that time, we just line up, a couple of contractors to get them in, and you'll even see just between like 3 different quotes that range varies drastically. And you can understand there's a lot of unknowns hiding behind walls and stuff, and I'm sure you could probably speak to unexpected things popping up. But that being said, though, is getting enough quotes and not just choosing a contractor off of Google, getting those referrals. As much as it's tough to try and get that from someone, because everyone wants to keep them close to the chest because they don't want them being busy when they need them. And
Yeah,
them
that's
jacking their
true.
prices up and all that stuff. Though you really want to get them from a referral, just it increases the odds of things going your way versus just someone running away with your money. You know.
Yeah.
Um, but no, I fully agree with that side. Now I want to go back to you speaking about different exit strategies. Some BRRRRs maybe not working out as intended. Adding the buffer in when you running your numbers. Being super conservative and look stress testing, if you would. Have you ever had a BRRRR deal where the finance numbers just didn't work out as planned, and how do you pivot? Like, what was the exit on that one? Did you still keep it as a rental? How did that go?
Yeah, we have for sure. We've had, for the most part, the easy solution in most cases, ideally. This really comes down to the right, either being patient yourself or having the right partner who's patient, depending on who's financing it. But the just waiting generally fixes it. If you wait, it comes down to how long do you have to wait, right? If you're okay, the market's moving up, and you can wait it out 6 months, a year, 2 years, and the money is patient, then you can pretty easily navigate that, right? You just kind of, okay, the numbers didn't work out perfectly right now. Maybe we're going to refinance out as much as we can, but maybe we're going to do that in a way that we'll probably refinance again in a couple of years just to make sure we get all that money out that you want. Or we're just going to refinance as much as we can, lock in on a mortgage that we like or a rate or something, and then the partner is going to be, or you or the partner are going to be okay with having less money out. It really comes down to having the right partner who's patient.
Yeah.
I really look for patient money now. Patient money is by far the easiest to work with, and that usually means it's usually patient because they have a lot more, and they're just using a small portion of their money for this deal with you. And if it's not patient money, or it's not super patient money, and you need to find other ways, I mean, selling it is typically one option. You can also look for other partners to bring in. We've done that. We've done that once, where we had a deal not go perfectly well, but it was still a good deal at the end of the day. We liked the property longer term. Actually, I've had this happen. I shouldn't say once. We've had this happen a few times, because also we've had scenarios where partners along the way, something's changed in their life, and they decided they wanted to get out, not because the deal went wrong, just their life had changed. Getting divorced, or financial issue that came up, and they just wanted their money. We've had that happen a few times, and we've brought in other partners to take over. We've done that a couple of times, and that's where having multiple partners, or having, being out there in the real estate community, is really beneficial, because you can lean on some of those relationships to look for maybe other partners, or look for solutions that, might require a little more creativeness. We've also looked at, I don't know if we've ever actually done this when a BRRRR hasn't gone perfectly, but you could also look at adding on more, adding on a second mortgage or something on top of the first mortgage if they really need that money out. Usually you can get your first, first position mortgage up to maybe 80% loan to value, but then maybe you need another 5 or 10 points on that. You could look at not going to be the best terms, but you could look at, tacking on another second mortgage there, or something private, just to ease the pain of whatever that money being out might be causing. So ultimately, the most important thing in that is just having the right team around you to help you through those situations. Because as long as you have that, you'll find the solution. But you need those right financial partners. Mortgage broker is huge in those situations. That a creative, investment focused mortgage broker, and realtor potentially, if you're looking at maybe selling it or doing something creative. Those are probably the most important two key members there in those scenarios, because between those two, if they know what they're doing, they'll be able to advise you and figure out a way out for you.
Oh yeah, for sure. Now, I feel like I need to go back to something that you mentioned. It's the setting the expectations, the under promising, over deliver, as well as the component of carefully selecting the partners that you're going to partner up with, right? So that you reduce the odds of them needing to pull out of the deal, or you reduce the odds of any unnecessary friction. What are some questions that you, on the one end, what are some questions that you would be asking when you're screening a partner to see if they're a good fit now? Seeing as you've done it so many times, you likely learn some things along the way where you're like, ooh, next time I need to ask that. Next time, maybe let's dig a little deeper into that. What are some, that's on
Mm-hmm.
the first end. On the other end is when you speaking to them, what are some things that, like common things that you find you say to sort of set those expectations, to under promise and rather over deliver?
Yeah, good ones. I would say, I would say, you really need to get clear on what your goals are first. So, because I could sit here and tell you what my kind of perfect partner looks like, but that might not be the same for everyone.
Yeah.
It probably wouldn't be the same for everyone, actually. And the way to understand who your best partner might be is to really get clear on what you want first and what sort of life you're looking for, or what sort of business you're trying to set up or investment portfolio you're trying to set up. You really got to get as clear as you can, because it's probably going to change, but as clear as you can today. What does that perfect, next 5 years, 10 years look like? Because in a lot of these money raising conversations, we're investing in real estate, and generally real estate's a long-term play, right? So you're not typically buying something and getting rid of it the next day or next year. You're doing this for long term, which means you're probably going to be investing with people for a while. So it's not like you're in and out with these relationships. These are relationships you might have for the next decade or more. And getting really clear on what your next decade or more looks like is a great starting point. Understanding what your goals are. Is it to build up a lot of cash flow? Is it to build up wealth for the next 30 years? Is it to build up wealth for something more specific, like you have a young kid that you're trying to build up wealth for their education plan, maybe helping them get in the housing market when they turn 20 or so? Maybe there's a house that you want to allocate for them, and that's your like little Timmy's house that he's going to have once he's of age, to move into there and help them down their next wealth building journey. It could be just retiring at a certain number, a certain age. Maybe you have a 10-year outlook that by that point I'm gonna retire and I need something to replace my income, and maybe that's the type of portfolio you're building. All sorts of scenarios, but really leaning in on that for yourself first is a great starting point. Understand what that goal is going to look like, because then you can start aligning partners that are also in line with that, right? Because if you have a partner who's looking to build up their portfolio in 5 years and you have a 20-year outlook, and that 5-year person is going to be probably a little too rushed for my liking.
Yeah.
And I like to look for people that are looking to build wealth over the next decade plus. And that's because I'm also looking to do that. And so that also helps a lot of the short-term issues that might come up. If you're looking for someone that's looking 10 years out in the future, so they lost 10 grand here today, or even bigger numbers than that. They lost a chunk of change in a deal with you, or they didn't quite get all their money out in that deal. At the end of the day, is it still a good deal? Do we still like holding this property? Because if we do, 20 grand here or there is not going to make a big difference. We're looking at building this into something that pays us millions of dollars down the road. So that's starting point, is understanding what you're looking for. Then go find partners that align with that. I like to look for partners who I also just like to work with. Like I never want to be, and I have done this too many times the wrong way, but I want someone to call me and I want to go, oh, cool, let's chat. I don't want to have someone calling me going, oh, this person again. That's just not a fun life, Like I want to have fun with people. I want to be able to do stuff I like to do with them. We don't need to be best friends, but I like to, want to talk to them and feel like we can chat about other things than just real estate. It's nice to have a couple other common interests, whatever that is, could be anything. Because, you're going to end up doing something pretty cool together, hopefully building up some wealth together. Maybe you want to go spend some of that money together one day, go on a trip somewhere, go to a whatever makes sense. I think there's some extra value in that over time, and it makes it a lot less about just money too, which is always, people might say they want to do it for money, but it's never just for money. There's always another reason on top of that. And those are the questions I like to ask around our partners is what their goals are with the money. There's two main parts I like to talk about. First of all, what is their experience with investments and with money so far in their life? Because in order to understand where their head's at, it's nice to know what their past experiences have been. Have they invested in in these sort of projects before? Have they just been investing in some stock market stuff? Have they gotten 2% return and they've been okay with that in GICs? Have they hit it big in some other thing on in stocks, or had a handful of people that hit it big in marijuana in that certain time period, and their expectations was pretty high in terms of what they were going to get in investments. And then I've had other people that have just dabbled in stock market stuff or mutual funds, and their expectation was to make 5% a year. And I'm like, okay, I like that because I can definitely beat that.
Yeah.
But the guy that just cashed out for multi-millions in cannabis, I don't know. Maybe I can't beat that. Maybe you got lucky and your expectations are way far exceeding what I can deliver. So it's always good to know where they've come from and learn a bit about that. Really, so I can understand if I can actually help you get where you want or not.
Yeah.
Or beat what you've had before, and then get what you want. So what does your next 5 years, 10 years look like? What sort of goals do you have? This also, when you talk like this and you're asking them questions, it's really important that you're asking a lot of the questions.
Oh yeah.
Right?
Yeah.
The questions that are going to ask me are going to be super basic, and I can talk about all the ins and outs of what a deal looks like and all the process. But I want to come from it a consultative approach to it. I want to know if I really can help them or not, and in order to do that, I have to learn more about them. So what's their next 5 years, 10 years look like? What's their number 1 or 2 goals that they want to accomplish in this arrangement together? And then can I actually deliver that or not? And if I can, then, what other interests do they have? Maybe learn a little bit more about their family, all that. Can I see myself really hanging out with this person, liking our talks and working together on this project? So those will be the areas I focus on, which is hardly anything to do with the actual deal or anything about the strategy. At the end of the day, I like to work with people that don't want to know about the strategy. They just want to get whatever they're going to get from the money that we are able to create together. And that has nothing to do with them learning the ins and outs of working with contractors or learning the ins and outs of the financing side or how do I find great deals. I don't want them to care about that, because when they start asking too much about that, I have done some deals here and there where I know it's kind of a one-off and I'll help them learn. And then but then I knew that was the goal all along. Generally, I like to have them trust me, let us stick to what we're good at, do the deal, manage everything, and give them a great return on their money. That's the more passive style investor that I typically would go for. So you learn all that through conversation. And then I'm missing your second question. What was the second part?
Yeah, well, I mean, you kind of tied them in together. You actually unpacked a lot there. Thank you. But yes, the first question was more so, what are some screening questions you're asking them to ensure that they sort of fit the ideal profile? And then on the other end is how are you setting the expectations for them?
Oh yeah, expectations. Yeah.
Now, one thing I wanted to ask is, what is your ideal? What is looking back? What does your ideal, call it, partner or investor profile look like? For people listening out there, like maybe they've just been going to real estate investor meetups and they've just been trying to partner up with peers where they find more of their conversation ends up just being strategy and cash flow and this, that, and the other. And then you get the other person who's like, hey, I don't partner up with anyone that's within those circles. I'm completely removed from that. And those are my ideal partners. What is your typical ideal partner if you were to just bunch them up into a group? What does that sort of demographic look like?
Yeah, usually, so first of all, before I even get to who I want to partner with, I also want to know what my actual strategy is. And one of the things that was super helpful for me early on that I got advice on was to actually be able to just, wrote a whole big long investment summary of what a deal would look like with me. And some of the key questions you want to be able to answer in that, because regardless, you will get questions from the potential partner around the strategy and all this. So you really got to be confident in your answers to why this strategy, why this location, why you, like, what's special about me? What's the exit strategies, and why now? Like, why does now make sense to do this? Why don't we wait? A lot of people love to put off investing, and you got to somehow be able to create some urgency. And so that's a really valuable thing to do up front, is to just write out all your answers to those questions and and showcase your value and get confident in your value. Because if you have belief in it, you can't sell something you don't believe in. So if you have belief in
Yeah.
it and when you've gone through all that, you go, wow, I got a lot of value here.
Yeah.
Or I can borrow value from my strategic partners that I work with. You can really build up some good confidence there. And then you want to look to who you're going to work with and what, how that person's going to fit into this model. And honestly, if you haven't done that upfront work, it's really impossible to know if that person's going to be a fit or not, because how could
Yes.
you possibly know? You're just trying to sell someone in that case, versus coming from a point of, I have value for a certain type of person and I need to now marry them up. And so when I'm looking to kind of marry those up and looking for the person that's right for our strategy, first of all, like I said before, I don't want to take anyone's last 50 grand or 100 grand or anything like that. I want them to have plenty more in the bank for more deals, hopefully,
Yeah.
or for, in case worst case scenario, something really goes wrong. I don't want them losing a whole bunch of sleep overnight because of this one deal. I want them to feel comfortable that if the worst case scenario happened in this deal, that they're still going to be good and being able to continue on with other stuff in their life. So I want to know what their money situation is as much as possible. I really want to know how much they have, what their other investments are. And then I want them to have a lot of money because I want them to do other deals with us. So I want them to be able to do multiple deals at once. If someone can only do one deal, like they only have the capability to do one deal, they're not going to be a fit for us. They don't have to want to do dozens of deals at once, but they have to have the capability to do multiple deals. And then that's a big thing. And then going on from there, like I said, I want to be able to hang out with them a little bit, be happy to chat with them. That usually means they're going to have similar interests to me. I always tend to get along with people that are into, growing themselves in some way, people that are interested in personal growth, maybe interested in sports, maybe, things like that are always kind of like-minded with me. And then usually the people that end up working well with us are people that are late 30s, early 40s, somewhere in that range, where they've been around life a little bit now, and they've dabbled in some other investment options. They've had maybe a bit of success or even a lot of success, but they want to add real estate to the mix. Either they've never really dabbled in real estate, but they've had great success in stocks or other areas, or built a great business and now have money they don't know what to do with it. Or they are someone who's just bought a house 15 years ago, 20 years ago, sat on it, been really patient, has a great job, works hard, has a family, has no time to learn anything about investments. And now they've come to a point where they realize, I should invest into something more. Real estate makes a lot of sense because everyone who has any sort of wealth has some sort of real estate. I should probably do this, but I don't know where to start. And those people are really good because, they're usually pretty patient, and they're also busy. So I love busy people that don't have all day to sit at home and just get in my way when I'm running the actual deal and the strategies. I want people that are busy, that are doing other stuff, that are probably pretty successful in a lot of other areas and just want to add on real estate as well. Those are some of the key points there.
Yeah, no, I love that though. Yeah, because your ideal partner isn't someone who's been sort of drinking the Kool-Aid on like, these are the crazy returns that they're going to be expecting from you, and this is what you need to do, and they just want to micromanage everything. You want someone who's good at what they do. They know real estate's a good investment vehicle, but they don't have the time for it, right? And that's where you make the perfect partnership. Now, you've done a fantastic job at sort of highlighting how people need to get clear on what it is they want, how they want to sort of get to that position, so what are their goals, what's going to be the strategy, the investment strategies they're going to use, why, and then just get a lot of clarity on that entire process so that they have confidence that they can make it work, firstly in themselves, and then they can actually portray that confidence to whoever they're speaking to and answer like inevitable questions that are going to come up. And then, you highlighted like key questions you should be asking when having these conversations with potential partners so you can see if you're a good fit. So it kind of puts all the different puzzle pieces together. But now someone listening may think, well, you know what, Sandy, I'm all good to do that. I'm not a person who's full of excuses. I'm ready to take action and really push that constraint on my real estate business. But where am I finding these people, especially if they're not just someone who's just attending real estate investment seminars? How can I? You mentioned that, you did a bunch of coffees, a bunch of phone calls, meeting up with people. Where do you find these people? How do I find these people? What answer do you have for that?
First of all, yeah, one important kind of mindset check before you even start looking for any sort of partners for this is that you got to realize that there is so much money out there available. There is just incredible amount of money that, like, if you're someone in a small town or you didn't grow up around any sort of money, or you've never really seen anyone with a lot of money or been around that environment, it's really helpful to find a way to go hang out in an environment like that for even an hour or a day, or, go spend, do something great to earn a paycheck, and go spend one night at like a Ritz-Carlton or a really nice resort. So, I mean, just realize that those places are not like one-offs. There's so much money. Go just drive around Toronto, or I'm assuming some places in Edmonton or Vancouver. Okay, go drive around some of the more expensive neighborhoods in these cities and realize that is like one little neighborhood. There's so many neighborhoods. There's so much money out there, and it is massively abundant. So you have to check yourself on that first. You got to know that there's a lot of money out there. You're not looking for something that's not, like, it's not difficult to find. You just need to be aware of it, and all of a sudden you'll start to see it everywhere. And once you've got that part, then there's a few ways. I think for some people, it's as simple as just going within their close family and friends and just asking some questions, and just say, like, making sure that your close relationships are aware that you're doing some cool stuff in real estate, and maybe they might not be the right partner, but maybe they know someone, or a couple relationships removed, there might be someone there that's looking for some help in this. That's one way that you just kind of naturally do day to day. If you want to be more purposeful about it and really seek partners like this, then you definitely ought to spend some, like, the cheap and easy way to do it is it doesn't happen overnight, but is to start building up, some content, some sort of marketing that you put out there where you're able to showcase your story a bit. You're able to tell about what you're doing. People can see you doing it day to day, whatever it is you're doing in the real estate world. Showcasing that as much as possible is just free marketing, and it's so easy to do in 2025. You might as well take advantage of that. All the different social media channels, you should utilize those as much as possible, and just show cool things. Show what you're doing, show what you're learning. Eventually, someone's going to come across you. They're going to probably look you up anyways if they don't know you already. So you want to have that there as a backbone, because now when you do meet that person, tell them, go look at my my Instagram feed. You can see all the stuff I've been doing for the last year. So that's definitely helpful. If nothing else, though, just pick up the phone and go book meetings. There are people out there. There's so many people out there that have a lot of money and have no idea what to do with it. If you want to look at a couple niches that are really good for that, even more specifically, people that are doctors or dentists, anyone who's gone to school for like 10 plus years and has a really well-paying job, probably didn't learn a lot about finances. They're probably getting called on by all the other financial advisors and all these other industries that typically earn business from these people, and typically don't provide BRRRR strategy type returns, or even they don't even provide like 10+% returns in most cases. So it's not that hard to go beat those. So you're actually doing them a great service by contacting them and exploring these opportunities together. So those are great fields. Dentists are great because a lot of them have professional corps, and they need to do something with this money that they have sitting in there. They don't know what to do with it. So there's a couple of niches there that are really good. I would look for those people, or high paying corporate jobs too. People that are busy in the corporate world that need help with this. Don't spend a lot of time exploring investment worlds. Like, you could find these people, but you probably aren't going to go look for like stockbrokers or people that are already in the financial industry. Those people are, probably not the perfect profile, because they probably have either limiting beliefs around real estate, or they're already doing real estate in some other way, and a lot harder to kind of get them over the edge. but yeah, I would look far. I'd look with your current core relationships, um, and create intrigue. You know, just
Yes.
telling someone that you're a real estate investor is cool. You know, that's okay. But start to create some intrigue in your conversations. You know, mention that yeah, I like to collect houses in my second or my after hours from work. I just go collect houses on the weekend. You know, people are like, "What? Collect houses? What the hell
What?
does that mean?" You know,
Yeah.
come up with a tagline like that that
Yeah.
creates intrigue, where people go, "I gotta learn more about that. Tell me more about that. Collecting houses. What's that all
Yeah.
about?" You know, if you come up with a one liner like that, then you just talk about that a lot. Real estate sells itself in Canada.
Yeah.
Real estate is like even more so than the US. The owning real estate is a dream for Canadians. It's not hard to sell them on that. They should probably try and own one or two more if they could, and just got to talk about it.
Yeah, no, I fully agree with that. Yeah, I like the create intrigue part. Like it gets the conversation going in that direction versus, oh, this is what you do. Cool. And then, the conversation keeps going. But, Sandy,
Mm-hmm.
this has been amazing. I want to squeeze in one of my favorite segments. I know we've gone over time here already, but I call this time capsule. So let's imagine you stumbled across a time machine that allows you to travel back and forth in time. You can't change anything, but you can give and receive advice from your younger or older self. So first, let's go back to when you were 18 years old. What advice would you give your younger self with the knowledge that you've acquired over the years? Now, this can be within business, investing, familial, personal life, or combination of them all. What advice would you give your 18-year-old self?
18, I was definitely quite a bit dumber than I am today. 18,
Aren't we all?
I'm someone that messed around for my first part of my 20s and really didn't get into doing anything too serious until my late 20s. So I could go back to even just 25 and I could teach myself a lot. But going back to 18, I would
Yeah.
say one thing that comes to mind for sure is just be more patient. I think I was in a I wasn't necessarily in a rush to be wealthy at that time, but I was in a rush to try and like do something cool. I definitely spent way too much time in comparison of others, and they say comparison is the thief of joy. And when you're
Yeah.
18, a lot of different things start to happen, right? A lot of your friends start to go to school or get other jobs, or you'll start to see your peers start to be maybe a little bit successful, and very dangerous to look around and
Yeah.
go, what the hell am I doing? Like all my friends are super successful and I'm living at home in my parents' basement or whatever. Uh, there's a long life ahead from that point. There's a long life. Just if
Yeah.
I think about, I just turned 39. So my past 20 years, as there's been lots of stuff that have happened. And I mean, there's just so much time in there. You have so much time when you're 18. Like just be patient. You don't need to. And actually, if you went out and gained a whole bunch of success by like 21, the odds of keeping that is really low. Like most people that hit it big early on don't keep it because they probably didn't quite earn it. What I've realized is long-term
Yeah.
wealth takes a little while to build. And if you get lucky along the way, that's a bonus. But um, getting it is one thing, preserving it is a whole other thing and a whole other strategy. And if you've taken a little while to build it up and earn it, generally you'll do a little better job preserving it. And, you might wake up, so many people that hit it big at 21 or 25, and then by 30, they're dead broke or bankrupt. And nothing wrong with just being
Yeah.
patient, letting things come to you as they do, and go learn a lot. When you're that young, it's not about making money, it's about learning. That's like your whole 20s. Just go learn.
Ooh, yeah.
So much more
Yeah.
valuable in the big
Yeah.
picture
I love it.
than going to making millions of dollars overnight.
Yeah, if you can understand at that stage in your life, you're sort of in the learning phase, not the earning phase. It really shifts things, especially comparing it to people who maybe have a lot more flashy things or maybe look a whole lot more successful on a surface level. But you're absolutely
Mm-hmm.
right, though. It's not about getting there as quickly as you can. It's about who you need to become to get there, and that takes time for you to become the person that can build and sustain their wealth. The person that you become is a whole lot different to a lucked out at a young age, made a bunch of money, and then most of the time you end up losing the money because you haven't become the person that you need to be to actually have a solid foundation and keep that going. You haven't learned the skills, essentially, that take time to
Yeah.
acquire. So I love that answer. Very unique. I love that. Now, if we look ahead to your 80th birthday, what advice do you imagine your future self would offer you at your present age?
So I'm 80 and I'm talking to myself today.
Yeah.
Is that the scenario? Yeah. I'm looking forward to being a lot smarter by 80, but compared to what I am now, because
hopefully,
what something you said there that I would have almost said too for my 18th was that it is all about who you become. Life, who you become is so valuable in life, and reinvesting into yourself is so important. So that you can become a better version of yourself, so that you can help more people and create more value to the world. And so I really see myself as growing a lot between now and 80. I hope I never stop learning and growing and becoming better. And by 80, I probably looking back at myself and telling myself to probably pour more time into my relationships and value them more rather than work. I don't see too many people on their deathbed saying, I wish I worked harder. I think a lot of people wish they spent more time in their relationships and their family and their friends. And just invested time into being a good friend, good family member. I think those are where a lot of the real juice of life comes from. It's not about making the extra $1 million or anything like that. It's really about focusing on relationships. I think that is where most of the joy is in life.
Yeah.
So, and that tends to happen around your mid-age. A lot of the first part of life is about achieving, and then I think you start to feel this pull towards more fulfillment, like you mentioned earlier. And fulfillment's all about creating great moments, great relationships.
Yeah.
And so that's what I'd say. I'd say create more incredible moments with your closest friends and family, and never settle for just okay moments. Make them freaking incredible and create as much memories as you can with people.
Yeah, I totally agree with that. 100%. And relationships are they're like our most valuable capital resource that we have. So constantly feeding them, like within our close inner circle, our family, and then our friends and the people that we serve, just feeding those relationships only result in a net positive. So yeah, I fully agree. If that's your focal point, there's no way to lose, even in your old age where you don't care about the money, because when you're old, as long as your basic needs are met, it's all about the people, the relationships, spending time with people. And so, yeah, I love that. Okay. So Sandy, this has been an amazing conversation. It really has. Now, for listeners out there who are like, you know what, this is too short. We should have kept it going. I want to hear more from Sandy. This guy has a ton of value, a ton of golden nuggets that he's dropped throughout the episode. Where can listeners connect and learn more about what you're working on?
Yeah, easiest way. I mean, I'm pretty active on social media, so it's Sandy Mackay is the easy handle there to find me. And you can find out if you want to explore some of my business stuff. The easiest website for that is foundspaces.ca. You can find out a lot of things in there, and we're actually just kind of merging our companies into that one brand. So you'll see all sorts of stuff that it ties in with me on that website in the coming weeks and months. And you know what, man, this has been an awesome show. Thanks for putting it together, El Ray. Amazing hosts. Great questions. Really helped the conversation flow well. This has been a blast. So I hope our listeners are getting some awesome value. And if they want to reach out or chat about anything that we've talked about here or more with me, I'd love to connect and hear from some of the listeners.
Awesome. Well, I'll tell everyone out there listening, I will leave Sandy's info in the show notes below. So feel free to click on and keep that going. Follow Sandy. Puts a ton of great stuff out there. To our listeners, if you want more valuable insights, be sure to subscribe. Share this with someone who can benefit. And as always, keep investing smartly. Thank you for tuning in to the Wealth Through Real Estate Show. If you want to learn how to use smart systems to scale your rent-to-own business, you don't want to miss the episode with Mitch Peterson. This is your host, El Ray Noble, signing off.